Let's welcome in a pharma company, Wockhardt Limited. They declared their numbers. Dr. Murtaza Khokriwala, Managing Director at Wockhardt, is now with us. Sir, thank you so much for taking out time for us. Could you tell us how the Q1 was like? The EBITDA for the quarter was negative. However, PAT came in positive because of the one-off sale that the company did.
So overall, if you see the quarter one results, on a positive side, we completed our transaction with DRL and a divestment of part of the India business. So that brought in a lot of liquidity and cash flow in the company. And that has helped in terms of overall stabilization of the financial aspect of the company. Plus, it also gives us the ability to take care of the debt repayment that we have in the next couple of years, and puts the company in a good position in terms of investing in research going forward. With regard to specifically the P&L that is there, we have had, because of COVID, a slowdown in the demand. And as a result of that, of our existing base business, there is a slowdown, demand-related impact of about 15 to 20%. And this is in India as well as in US and UK, our international operations. And in addition to that, on the expenses side, the EBITDA is lower than what it was earlier, primarily because to one-time write-off of various expenses. On our operational side, I think our cost control measures that we have are in place. And our only issue, and I think that is more of an industry-wide issue, is on a demand side, there is a slowdown of about 15% or so.
So just to talk a bit more about the deal with Dr. Reddys, what does this do the company in terms of the balance sheet strength? What does it mean in terms of the strength for balance sheet after that deal?
I think the DRL deal is very positive from a financial balance sheet as well as a cash flow for the company. Our net worth increases from 3,000 to 3,800 crores, and our net debt, which was at 0.8, is now at 0.3. So from a debt management point of view, also it is very beneficial. It also allows us to fairly secure all our debt-related repayments over the next 2 or 3 years. Because of the cash that is available with company. The cash also allows us to invest into research and development of some of our NCE molecules, antibiotic and biotech program, which will be the growth driver of the company going forward. And we are moving from a purely generic company and moving to a far more differentiated company with more specialty business and more differentiated products in through research and development.
Wockhardt has been impacted in the US, due to all the FDA issues. So how are you planning to solve them? And do you think there will be more costs that will be incurred by Wockhardt, to get these resolved?
Our US FDA remediation for our India facility that we are offering to the FDA is by and large complete. And we were requesting the FDA for a site visit earlier in the year. But because of the COVID situation, obviously that is not possible in this year. So as soon as FDA is resuming the inspection and the visits to facilities, we should be able to have that inspection done and get a result of that. Our site has been completed the remediation. We have also had a third-party independent audit. So we are ready in terms of our remediation. We will await actually the improvement in the COVID situation and for FDA to come back and do a site inspection.
Where do you see the direction of other businesses, at Wockhardt, especially after the sale to Dr. Reddys? Do you expect more focus and growth there?
Yes, actually, in a way, what we have done is for the India business, we have moved our business focus and portfolio more from a acute portfolio to a chronic and specialty portfolio, and this allows us to have a higher kind of focus in this area. Diabetes is one of the areas where we have significant amount of investment, and also overall integrated kind of an approach over there in terms of research and development, in terms of API manufacturing, in terms of formulation. So that is one core focus of our business in India, diabetes and chronic specialty business. In addition to that, our NCE molecules which are there, the drug discovered NCE molecules, we are launching that in the Indian market. In fact, we have launched our first molecule, antibiotic, Mroc, that is Mroc injectable and Mroc tablet, and that is used for resistant antibiotic infections. We launched it in May of this year. Unfortunately, the COVID came at that time, so the immediate outcome on the business will be slightly slow. But from a qualitative feedback that we have got from various key opinion leaders and doctors in the market, the product performance is very good. So I think that is positive for us. So overall, if I say from India business point of view, we are moving from an acute business to a chronic and specialty business. And diabetes and the NCE molecules are going to be a very important focus for us.
What is the sort of opportunity that COVID does for Indian pharma? Do you expect more growth, market share to be gained globally by Indian pharma companies?
Yes, while the entire COVID situation is extremely unfortunate and has put the whole world in a totally disturbed the entire all dynamics of the operations and industry and finances. As a result of the COVID situation, I think from a pharma industry point of view, there are a couple of areas where there could be an opportunity where one can look at. One obviously is the vaccines, and that by far probably is the largest opportunity. And I think if there are various opportunities in vaccine for Indian pharma companies also. One is as a manufacturer, one can do a contract manufacturing. In fact, our UK business and UK operation has been successful in having a manufacturing contract with the government of UK for the manufacturing and fill and finish of the vaccine for the UK market. So I think there are a lot of opportunities that will be coming out of the vaccine, I think, for global pharma as well as India pharma, because the market is huge and the need is huge. There are about 7 billion people in the world, and each one may need 1 or 2 doses. So 7 to 14 billion doses will be required. And that is a lot of resources will be required for that. And as a result of that, there is a business opportunity.
The vaccine, you just mentioned about it briefly, the opportunity over there. Over the next 6 to 12 months, what sort of news flow do you expect around vaccine?
I know that the pharma industry has responded quite magnificently and to the global pandemic situation, and we have more than 120 vaccine products in development in just the last 6 to 9 months time, and that is kind of unprecedented, I would say. Also, it is very likely that we would have a vaccine in the market over the next 6 months time. And just to give you a comparative, the last vaccine, from the time they started development to the time it was introduced in the market, was about 5 years. In this situation, if the vaccine comes into the market even in the next 6 months, that development time, which was about 5 years previously, now for this vaccine could be 12 to 15 months time. And I think that is the combined effort of pharmaceutical industry, regulatory agencies working all over the world, and kind of a collaborative approach that is emerged by getting all the resources together. And that includes the pharma industry, it includes the regulatory agencies, includes the various funding agencies like various foundations are there who are funding research. And also, very importantly, the government is playing a very important role in trying to fast track the entire process of development, securing the manufacturing, and bringing this out to the population in the shortest possible time.
Thanks so much, sir, for taking out time for us. All the best for the future. On that note, we're taking a break, coming back quickly. Stay tuned. Markets continue to see a consolidation on the downside. Nifty down 79 points. Mid caps have taken it off the chin in today's session.